All right. Good morning and welcome to yet another video training section. On this training section, we'll be talking about support and resistance, how you can effectively map out a reliable and technical support zone and resistance zone in the market in the chart. So basically on this video, I will be explaining two technical ways of setting up your support and resistance in a very appropriate order, in a very pinning order. In some of those support and resistance, we will drag it up to a zones we call the killer zones. They're really strategic, powerful way of setting up your support and resistance. There are various ways people spot their support and resistance, but it's actually what you want to know and want to understand which way is most reliable and most efficient. It is it's one that is very technical for you and reliable as well for entries in the financial market. So one of the ways, or one of the unprofessional ways people do set up their support and resistance is by eyeballing the chart. Is another way you can set up your support and resistance, but I don't see it as a reliable way of setting up your support and your resistance. Eyeballing the chart. Eyeballing the chart is a situation where you just come and look at the chart. Okay, look at this zone. Price touched here and dropped. Price touched here and dropped, and you feel this is the zone. This is a support. This is the resistance zone, and you probably you set something around that zone. Could be reliable. Is it technical enough? You look at the zone. Okay, it's a price hit here and then reversed. You still put something up there and say this is my support. It could be, but the question there is it reliable enough to hold price as at the time you are trading? Now, it is very important to understand that you are a very, should I say, you are a very distinguished set of traders. You are a peculiar kind of trader. You do not trade exactly what other people trade on their chart. Sometimes you bend the rule to suit your style of trading. All right. Now, this could be a very reliable support and resistance for day traders, but to you, you're looking for something more, something bigger, something better. You're a sniper. You're a sniper in the market. You don't hit every shot you see. You take shots that are calculative, shots that you have technically analyzed, perfectly set in order. You don't just hit zones and hit zones and hit zones in the market and hit zones. You hit zones once, you leave, you watch, just like a hitman. That's what you do. That's why you are. That's why you're the best. And that's why trading HFX, binary system of Forex, is the best style of trading you could introduce to me. So I'll be taking you guys on two major ways to set up your support and resistance. One of the way is charting. Charting format is one of the way we will talk about that. So one of the way we'll be doing that is by charting. That's two ways. Let me keep this. All right, that's two ways. Two ways we could set up a support and resistance. Okay. So the first one I mentioned I'm going to take you on is charting, candle charting. And the second way is the second way should be is transaction charting, transaction setup. Okay. All right. So we'll be looking at these two ways. We're doing the first candle charting and then transaction setup or charting. So let's get started on it. So how to start up your charting or how to set up your support and resistance via charting is a very efficient and a very transformable way of creating a support and resistance in your chart. So how to do that? First of all, you look at your time frame. So my chart is on 5 minutes. I'm a normal 5-minute executor, a trader for 5-minute traders. Okay, so your chart is at 5 minutes. One of the ways to start charting your chart or to start setting up your support and resistance is by breaking your chart, your time frame from bigger time frame to lower time frames. From bigger time frame to lower time frame. That is, you could start on the daily. You start on the daily and grow up from the daily, hourly, 30 minutes, 45, all right, and 15 minutes, okay, all right. So that is the way of charting. Now what that helps you do is this: it helps you create reliable zones from the daily chart. What zones that were strong on the daily chart? You know, the daily zones are really powerful zones to retest when market comes back to it. So from there you get hourly zones. Hourly zones are so powerful too, since you're a scalping trader, a scaling trader. So to be very reliable enough. The next is that's running it down up, running it from the bigger time frame to the smaller time frame. Okay, so let's get started on it. So we'll have here, we are switching this to daily time frame. So this is, okay, so this is the daily time frame of this chart. Daily time frame. Okay, so we have what's going on there. So okay, so we're getting started already. So the daily time frame will have what's all of this. All right. So one thing you want to do, you want to get hold of your candles. This is called candle charting. You're charting your candlesticks. I really want to clear this chart, to be honest with you. I really want to clear this chart. You have to hold while I do that. I want to have a clear chart here. I don't know. So I have a clear view of what we're doing. Okay, so it's cool enough. All right, it's cool enough. Okay, so now we'll have this. You want to make sure that your chart is so broad, that. Okay, so one thing you want to understand is you are not charting the current candlestick. You are only charting the previous candlesticks. Now you are charting, or you're setting up your support or resistance via the body and the candle of the previous chart. Sorry, the candle of the body of the chart of the previous candle. So this is what it looks like, and this is what you will be doing. That is, if you want to set up your support and resistance using the charting method, this is what we're having. So this is the previous candle. The previous, and I put up my zone below. That's the wick and the body. So I decided to make that blue. Okay, I decided to make that blue. Okay, so this is the previous candle for the wick and the body. I want to button this chart more so you see very clearly. So this is the body. This is the wick. So that's for my support. I do the same thing for my resistance, the body. I make that red. And then the wick, I leave it at red. So this is for the daily, for the daily chart. Okay, we've gotten the body and the wick for both the support and resistance for the previous candle. Take note. From the daily, we move to the hourly. Okay. So we'll move to the hourly front. On the hourly, look at what we have here. See that? So from the hourly, we see that this daily chart acted as a support here, which took price above it. Came down here also, acted as a support, which took price above it. So we are also going to be looking at it's a previous candle for the daily. For the hourly chart, I'm sorry about that, beg your pardon. For the hourly chart, this is the previous candle, and then we also have, so that chart doesn't have a good week, enough week, so we just have the body mapped out. And then for the support, we have the week. Make sure it's placed rightfully placed on the week, and we'll make that blue. And we also have the body of the candle for the previous. We make that blue too. We leave that as blue. Right, so we have here the support and resistance. So this is for the daily chart, for the daily candlestick. We still progress above it. Other 45 minutes. For the 5 minutes, this is the previous candle, previous candlestick, previous candle. And for the previous, we'll have, remember when we were looking at, okay, one thing you should know is in support and resistance, . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . A previous support can be the next resistance, and the previous resistance could be the next support. Is one thing you want to know. So remember that either on the hourly or on the daily, this red zone, the reason why we make these zones different color is to map out and identify which is support and which is resistance. Remember that this zone was once a support zone, but look at what it did here. It became a resistance. This week, cup there and then tush, it went above it. So for this is the 45 minutes, and this is the current candle. Sorry, this is the previous, and this is the current candle, which you can see as it's dropping and fluctuating around price. So this is the previous. So we're more concerned on the previous rather than the current. So we just set up our support, okay, on the body. All right, the week is already taken by the previous resistance zone. So we have, so now we have the support, the body of the week, of the candle rather, make a pattern. Then here we have the week for the resistance, we make that red. And also we have the body of the candle. And we leave it as at red. Okay, so this is for the 45 minutes. We still move to 30 minutes chart candles. All right, so for the 30 minutes, the support and resistance is still valid. For the 30 minutes, the support is still valid. Okay, so we don't bother ourselves over it. So we go over to the previous candle for the week. There is a body there, so we still put up the body. Okay, so that is enough for that particular. So we move to 15 minutes. So for the 15 minutes, look what we have in there. For the 15 minutes previous candle, we have the wick being taken already, and so we just go straight to the body of the candle. And then the support zone has been taken by the red, by the bearish candle for the previous, but we still have to put something, okay, just above it. We just have to do that for the 15-minute candle chart. So you are obviously done setting up your support and resistance by charting method. So after this, all you just do is this: you take a chart to your 5 execution time. You take a chart to your 5 execution time frame, and this is what you have in. So validating this all the things you've done already on in here. So you're just having here resisted, after that as a resistance, which took price down, okay, to the zone, and then the same thing happened here. Okay, the same thing happened here. Here it broke it and added as a support, which continued. Here resisted the price, acted as a resistance to price there, and then that drop below that zone. And then here we also have, it broke this the resistance line. You see that? I don't know if you've seen this chart with me, but it broke the resistance line here. So when it broke it, it acted. Remember, for support and resistance, remember I mentioned before now that previous support can or could be the next resistance, and the previous resistance could be the next support. The reason is, once a zone has been retested more than 2, 3, and the agility, the gravity of that zone, the intensity has declined, there is possibility of a price to break in that zone. And once price breaks the zone and comes back to that zone, it becomes a support for it. It is also difficult for it to just break it and drop. So sometimes, most of the times, it acts as a support to it. Or when price is dropping and breaks in zone. This is what I mean. This is what I'm talking about here. Let me do this quickly enough. So let's say, for instance, let's say for instance, remember that this was once our support, this is once our resistance zone, or this is our resistance zone. So let's say price is coming from the support angle, and it came to that zone and rejected below, came to that zone again, rejected below, came to that zone and broke. Once it breaks that zone and comes back to it again, most times it cannot just break it easily. It's going to act as a support for it and continues above. So zones that retest, especially zones that retest price more than twice, threes, there's every possibility that the next touch on that particular zone is going to drop from that zone. So this is what we mean by zones broken, and then they want to come back there. This is what we're talking about when we say the next support could be the next resistance, and the next resistance could be the next support. Once the zone is broken and comes back to that zone, there are over 75 to 80% possibility that that zone cannot hold price and would act as a reliable support or reliable resistance to it. So you could see when price came to this zone. When price got here, it acted as a strong resistance, very strong resistance to price, and price dropped to the moon. That is dropped from the moon and retested the zone, which acted as another support for it. Though they didn't touch exactly at that zone, but the wick almost came there, and we'll have that push up above. So this is literally it for charting up your candles based on support, based on candlestick. That's candle charting. Remember, one thing you want to know, hold strongly is the method of doing this. You pull down your chart, pull down your time frame from the hourly, from the daily. Concentrate on the previous candlestick, the body, and the wick of that candle. We progress from the daily to the hourly, from the hourly to the 45 minutes, 30 minutes. And you have a 15-minute chart, and boom, you are on that. So this is another way to set in. This is one of the ways you could set your support and resistance for binary HFX traders. This may not be reliable for normal forex traders. I repeat, this may not be reliable for normal forex traders. That's for scalping traders or scalping traders. Okay, so this is literally it for charting up your chart. Find the candles chart. So after this break, we will continue with the method 2 of how to setting up your support and resistance, which is 1,000 pips transaction levels. They are also technical and powerful zones to know about. So guys, I'll see you on the other side. Do have a wonderful day.